Hey, what's up, money mavens and wealth warriors? Welcome back to the channel. Picture this. You got $100,000 burning a hole in your pocket. Maybe it's a windfall from a bonus, an inheritance, or years of grinding it out. And you're itching to make it grow into something life-changing. But here's the million-dollar question, or I guess the $100,000 question. What's the smartest way to turn that cash into a fortune? Do you jump on QQQ, the tech-powered ETF famous for its explosive growth, or take a different road with JEPQ, which tempts you with sky-high dividends thanks to its clever income strategy? This isn't just a casual pick between two options moment. The choice between these two ETFs could totally reshape your financial destiny. One could rocket you to a jaw-dropping $10 million portfolio, while the other could shower you with over $25,000 in monthly dividend income. Both track the Nasdaq 100 index, but they're like apples and oranges in how they play the game. QQQ's all about chasing those big tech-fueled gains, while JEPQ mixes growth with a unique covered call twist to stack cash flow. In today's video, I'm diving deep with you and our pal John to unpack these two titans. We'll dissect their strategies, compare their performance, analyze their risks, and figure out which one's the perfect match for your $100,000 and your big picture goals. Stick around to the end. I'm dropping the full projections, and trust me, the numbers are wild. Let's roll. Before we get into the juicy details, let's level set for anyone new to the game. What's an ETF anyway? If you're scratching your head, don't worry. I'm breaking it down simple and clear. An exchange-traded fund, or ETF, is like a big shopping cart of investments you can grab all at once. Instead of agonizing over whether to buy Apple, Nvidia, or some random small-cap stock, you're snagging a piece of dozens, sometimes hundreds, of companies in one smooth move. ETFs trade on stock exchanges just like regular stocks, so you can buy or sell them anytime the market's buzzing, at whatever price it's at that moment. The killer perk? Diversification. Your money's spread across a bunch of players, so if one company tanks, say a tech giant trips over a bad earnings report, the others can cushion the blow. Take QQQ as an example. One share gets you instant exposure to 100 of the Nasdaq's biggest non-financial names. Think Apple, Microsoft, Amazon, all bundled into a single ticker. It's like a cheat code for dipping your toes into the market without sweating every headline or balance sheet. But when we're pitting QQQ against JEPQ, it's not just about owning a slice of the Nasdaq 100. It's about how each ETF runs its playbook, what they're chasing, and how they fit into your personal money mission, whether that's building a massive nest egg or generating cash you can spend today. Let's kick things off with QQQ, the OG of growth ETFs. Launched way back in March 1999, this beast has been a Wall Street staple for over 2 decades. It tracks the Nasdaq 100 index, 100 of the largest non-financial companies listed on the Nasdaq Stock Exchange, a lineup dominated by tech giants that have reshaped the world. Tech makes up 51.33% of QQQ's portfolio, and we're talking the heaviest of heavy hitters. Apple at 9.97%, the iPhone king raking in billions, Nvidia at 7.41%, the chip wizard powering AI and gaming, Microsoft at 7.85%, the software titan behind Windows and cloud empires, Amazon at 5.62%, the e-commerce and cloud juggernaut. Beyond tech, it's got 15.98% in communication services. Think Google parent Alphabet and Meta, 13.15% in consumer cyclical like Tesla and Airbnb, and 5.98% in consumer defensive names like PepsiCo. But let's cut to the chase. QQQ's all about capital appreciation, riding the tech sector's roller coaster to the top. It's built for investors who dream of turning $100,000 into millions by betting on Silicon Valley's relentless innovation. No gimmicks, no fancy footwork, just pure, unadulterated exposure to the Nasdaq 100's growth engine. When tech's on a tear, like during the post-2020 boom, QQQ's your front row ticket to the action. Now flip the coin to JEPQ, the fresh face that hit the scene in 2022. Like QQQ, it tracks the Nasdaq 100 with a tech-heavy tilt, 50.2% of its portfolio in technology. Its top holdings mirror QQQ's crew. Apple at 7.99%, Nvidia at 6.29%, Microsoft at 6.55%, Amazon at 4.87%. The same big dogs driving the index. But here's where JEPQ throws a curveball. It's not just a growth play. It layers on a covered call strategy to supercharge its income, making it a hybrid of growth and dividends that's got investors buzzing. So what's this covered call trick all about? Let's break it down like we're chatting over coffee. JEPQ owns those Nasdaq 100 stocks, Apple, Nvidia, the whole squad, and then sells options contracts called covered calls on them. It's like this. JEPQ agrees to sell those stocks at a set price down the road if someone wants to buy them. In exchange, it gets a payment, a premium, from the buyer of that option. Think of it as renting out your stocks for extra cash. If the stock price doesn't hit that target, JEPQ keeps the premium and the stock win. If it does, it sells at the agreed price, still a win, because it's pocketing that premium either way. That cash gets funneled to you as a dividend, boosting JEPQ's yield to a mind-blowing 9.92%, while QQQ stuck at a measly 0.56%. QQQ's all-in on growth. Dividends are a side note. JEPQ? It's juggling growth and income, giving you cash to spend, save, or reinvest. The catch? Those covered calls cap JEPQ's upside. When tech stocks go ballistic, like Nvidia doubling in a year, JEPQ might miss some of that party because it's locked into selling at those option prices. QQQ? It's free to soar with no limits, making it the champ for growth hounds. Performance tells the tale of two strategies. QQQ's a growth juggernaut. Over the past year, it clocked a 16.75% return, leaving JEPQ's 4.77% in the dust. Why the gap? Tech's been red hot, and QQQ's built to ride every wave. Zoom out, and its 10-year average share price appreciation is a sizzling 16.66%. Proof it's a long-term winner when tech's thriving. Think back to the 2010s. Apple's iPhone boom, Amazon's cloud explosion, Nvidia's AI surge. QQQ cashed in big. JEPQ's newer, so its track record shorter. But that 4.77% last year blends 2% price growth with its hefty dividend haul. Its covered calls smooth the ride, less volatility, because those premiums act like a safety net when markets dip. During the 2022 tech pullback, JEPQ's income likely softened the blow, while QQQ felt every punch. QQQ shines in bull markets, think 2020's tech rally, while JEPQ's your steady eddy in choppy waters. Risk profiles mirror this split. QQQ's tech-heavy, 51.33%, so it's a roller coaster. Nvidia might jump 50% or crash 20% on a single headline. QQQ rides that wave. JEPQ's less wild. Those call premiums buffer downturns, cutting volatility. Growth chasers stomach QQQ's swings for the upside. Income seekers lean on JEPQ's stability. Dividends are JEPQ's superpower. That 9.92% yield means $9,920 yearly on a $100,000 investment. $8.26 monthly versus QQQ's $560 yearly or $47 a month. Retirees, side hustlers, anyone needing cash flow, JEPQ's a dream. QQQ pays dividends, quarterly, tiny crumbs. But it's not why you buy it. Growth's the prize. Liquidity? QQQ's a titan. 31 million shares traded daily. So buying or selling seamless, with tight spreads. JEPQ's liquid too, but its volume's a fraction. Still tradable, just less hustle. Fees? QQQ's lean at 0.2%. $200 yearly on $100,000. JEPQ's pricier at 0.35%, $350, because managing covered calls isn't cheap. Now, the moment of truth. What's $100,000 worth over 10, 20, 30 years? For JEPQ, that 9.92% yields nuts. But let's be conservative. Say 5% long-term, market cycle shift. With 6% dividend growth and 2% price appreciation, it's early vibe. Year 1, $107,000, $5,000 dividends, $2,000 growth. Year 10, $215,900, doubling up with reinvested cash. Year 20, $466,599, steady climbing. Year 30, $2,484,713, with $329,457 yearly dividends, $27,454 monthly. Total value added, $2,384,713, $337,679 from growth, $2,047,034 from dividends. JEQ's an income beast. QQQ's turn. 0.56% yield, 10.18% dividend growth, 16.66% price appreciation. Year 1, $117,220. Techs already flexing. Year 10, $484,500. Over double JEQ's all. Year 20, $2,322,833. Millionaire status. Year 30, $10,851,269. Insane. Dividends? $7,459 yearly by year 30. $6.21 monthly. Total value added, $10,751,269. $10,669. $313 from growth. $81,956 from dividends. QQQ's a growth Godzilla, $8.3 million more than JEQ. But JEQ's $27,454 monthly dwarfs QQQ's $621, over $25,000 more. So what's your play? QQQ's your $10 million ticket if growth's your jam. Perfect for long-term wealth builders betting on tech's dominance. JEQ's the cash flow king, delivering $25,000 plus more monthly. Ideal for income now, like funding a dream trip or early retirement. Want more ETF showdowns? Click the video on screen for QQQ versus QQQM. Love this deep dive? Smash that like, tell me your pick below, and let's keep stacking wealth together.